What's up, guys? It's June 9th, 2025. We had a sideways day in the market. Lots of chop. We're in the middle of a multi-day market cycle reset. So what do I mean by that is we're at the end of the market cycle and we're waiting for that reset. The market cycle goes breakout, channel, trading range. Here's the last trading range, big up, big down. Then we broke out. I want to give a quick shout out to all the members and subscribers. I appreciate you guys tuning in. I love talking to you guys in the Discord, so thank you for tuning in and subscribing. So look at we have the big up, big down, and then we break out. So here's the breakout. These 4 or 5 bull bars. Then we have the channel phase. We channel for a few legs higher. Channel, 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 channel. We go sideways. Bears try to get the breakout. It fails. Bulls try to get the breakout. It fails. Then we retest the breakout point here. Now we're officially in a trading range. Goes big up, big down. Big up, and now we're going sideways again. So we're just waiting for that breakout so the market cycle can reset, and then we reset. So then when we get the breakout, we're going to look for the breakout, then we're going to be in the channel phase, and then we're going to be in the trading range phase. So if you're wondering why we're going sideways, we're at the end of the market cycle. Something to think about, how to start tying in higher time frame context with the price action we see on a day-to-day basis. Weekly chart, daily chart. Just opened up small bar today. We had a smaller range. What is that? 28 points? Wow. Went from having like 200-300 point days a few months ago to 28 point days. So challenging day. It looks like it's going to break down, reverses. Looks like it's going to break out, reverses. Then we get a tradable leg, and it was right at the end of the day. So 28 point range so far on the weekly chart. We're trading at the high of a third leg. Leg 1, pull back leg 2, pull back leg 3. Testing right around here. Bulls want to break down here. Bulls want a new high. Big down, big up. So overall, where are we in the market cycle? Here's the last big down, big up. So we broke out, channel phase for 2-3 legs higher. Now this rally has a big down move, and again we're in a trading range. So the time frames are lining up that we go sideways for quite some time, and then we'll have vacuums within the trading range until it finally gets to break out from here or down here. Interesting spot. We went from having a very long rally, channeling back and forth, then we traded below the EMA, and when I just stuttered a little bit. There was a lot of volatility here, and I remember blowing out an account just from taking a 1 contract trade. It ripped against me like it was almost like a $900 drawdown and by the end of that day I couldn't even handle a pullback. So this is very hard times. I remember, I think it happened right around this bar here in that week, and then we get that rally. Now we're in a trading range. Daily chart, zooming in from the weekly. Bears got a leg count reset. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. That leg 4 is a higher low. Let me zoom in. Do that recount again, leg count again. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. That leg 4 is a higher low. And this is the first leg for the bulls. So leg 1, pull back leg 2. This gets a deep pullback. We're at the higher chain range. It's a wedge bottom. So push 1, pull back, push 2, pull back, push 3. Wedge bottom after a bull bar, testing around the 50% mark, and that's what starts to break out. This breakout goes above the EMA, enough momentum to reset the leg count. Leg 1, pull back, leg 2, pull back, leg 3, and that's where we're at today, and stuck in this trading range. This leg 3 also had 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Bears got 2 legs down, leg 1, pull back 2. You could call this a leg 2 right here. So leg 1, pull back, leg 2, pull back, leg 3. Because there's a tail here and there's a tick here, we know that there's a bull leg, there's a trend line break within the actual bars itself. So we went to like maybe the 45-minute chart. Actually, let's do it like this. There's that leg. So this is kind of drawing, I was trying to draw these 3 bars. So we have that small bear bar that was at the top of the training range, right around here. Then we have that tail. So the tail starts here, it goes up, comes down, and then that pullback is right here. And that starts to tick on the next bar over. The leg 2, pullback leg 3. That's what I was counting. I'll go back to the daily chart so you guys can tie it together. And then there it is. You guys get it? Let me know if you get it in the comments how I counted 3 legs down. Leg 1, pullback leg 2, pullback leg 3. Into the EMA we rallied, but we're going more sideways. Broad bull channel. Which brings us into today's chart. Turn on the numbers. I am currently in a trade right now. I look for the 50% pullback. Rallied, so I started it from this pivot to this swing. I got filled on this bar, a little bit of a drawdown here, and now it's just been hovering around the EMA. Been in this trade for a little bit too long, I'm not gonna lie. I've kind of fallen asleep watching it. An hour and 15 minutes, so there's no juice in the markets. I might just hit out and wait for a strong move down, because I also do have a bear bias from this leg, but we're trading above the higher time frame EMA, so I'm just trying to stay objective. Higher time frame EMA, bear setups failed down here. Trading range behavior, we're around the breakout point, so I got long at the 50% pullback from this channel to that high. Yeah, from here, and then there's your pullback, filled. I'm looking for a test of the high again. Problem with this is this leg right here. Bears that got trapped here may have already got out of break even, so the dynamic for leg 2 has disappeared, and it went back to the high. So that's what I'm worried about, and I'll be willing to hit out pretty early on that trade because the dynamic for leg 2 has disappeared. Okay, now let's get into it. Bar 1, big bear bar closing on slow, trying to get a second leg down, but it doesn't. Bar 2, bad follow through. Bar 3 and 4, bad follow through. There's 3 bull bars, but there's no gap. And we are in a bull regime because we're above the higher time frame EMA. There's no gap, and we're not above bar 1's high, so this could be nothing more than a deep pullback. Bar 5 sells off and then rallies. So now we have bears that bad follow through above the EMA, bears that bad follow through below the EMA, bears that bad follow through above the EMA, and then we see bar 6. Bar 6 is a bear bar closing on slow. About a second ago, I said this leg shot to get leg 2, but it doesn't. I was wrong for saying that. What I meant to say is it doesn't get a leg 2 that goes past its swing. It does get a leg 2 right here with bar 6. Bar 6 is the leg 2 for bar 1. It's just it's a leg 2 that doesn't meet the minimum objective, so the leg 2 failed. Again, we're in a bull regime, so bear setups will fail more. And then we get another rally, bar 7. Rallies testing the high of bar 6, so we know that bears that slow down here are trapped. They're going to look to get out break even, shorting higher and higher. Bar 8, inside bar. Look at the rally on the EMA. There's a small tail, so we know that bears are still trying to sell the average price. Instead, they get trapped with bar 9. Finally, there's a gap. When bar 10 closes, the gap is printed. The gap happens right around the swing of bar 6, so we know there's sellers right here. But then the problem is bar 11 bar 10 has a deep pullback. So the bears that got short here, and now they're out. They buy back their losing position, and that causes a rally. 11 and 13. 11 rallies, we're still within the bar 1 range. 12 small bear bar. Give me 1 second. I'm just gonna hit out of this trade for small profits. So that's a scratch. Wait for the next setup. I was in the trade for like an hour and a half for 16 bucks. So it is what it is. 1, 2, 3, 4, 5, 6. 1, 2, 3, 4, 5 bull bars. Bar 12 is the first opposite bar. Problem with this is, although there's 5 bull bars in a row, the bears that are trapped are already out. So there's not too much momentum left, and we're coming to that third leg. Leg 1, pullback. Leg 2, pullback. Leg 3. So tough. If you're gonna buy this, you have to understand the context. You're also buying at the higher trading range. 13 explodes. Big rally, bad close. This is the biggest bar within this trend here. If this is the trend, it's the biggest bar within the trend. Third leg, climatic price action. Bar 14 has a tail. So remember the daily chart? This is a good example of fractal price action. The daily chart had the 3 legs down, but we couldn't really see it. These 3 legs, look at the 5 minute. very similar. Leg 1, pull back, leg 2, pull back, leg 3. Bad follow through. 17 is testing the breakout point here. And then bulls get a rally. On NASDAQ, I think I was long around there and I caught it. I did all right today. I'm up 150. I had a winner, a scratch, a winner, and a loser. And I think end of the day, I had a loser, but I reduced my position size, so it wasn't that bad. So finish the day up. Here we can see that bar 17 is testing the breakout point for the bulls, this rally. And they get another rally here, 19, 20, 21. There's another gap. Look where the gap is. These gaps line up at support and resistance. The gap's right around here, the midpoint of this sell-off. See? Because you could argue the spike, the sell-offs are right there. I'm just doing it from the bear bar to here. Look at the gap. So bears tried to sell the 50% mark and got trapped, so they're going to sell more, bar 20. And they get out at, they don't get out at the low down here. So let me re-say this. Bears short here. They short a little bit more than trap. They're going to short more. And now they're going to get out for profits at right around their original target down here, the 17 low. 24 is just shy of that. They buy back shorts, and that causes a rally. Again, in trading ranges, a lot of people are averaging down with small positions. I tried that last week and got stomped on, so I'm just going to be taking the loss for a while. That's okay. When the time's right, I'll get back into that. I really didn't back test averaging in. I was just doing it at support resistance levels, so that's my fault for taking trades that I didn't back test. I'm a big proponent or proportioner, or I'm a big need to back test, follow a system, and that system will teach you how to trade the market. So if you guys want to do that, stay tuned. I'm dropping more education items this year. Yeah, it's going to be a fun year. I got a lot of things in the pipeline. So 24, 25, 2-bar reversal, 25 strong to get follow through, 26, bad follow through, 27. We started to have some sort of a triangle here. 27 has a tail, so bulls scalped here and they got out back at the original high. And then we see bar 29. 29, big bull bar closing on slow. Leg 1, pull back leg 2, pull back leg 3, testing the highs, and then that sells off. So bears can get short right around here. They actually, did they make 1R? So if you had a limit order here, you actually didn't make 1R, so you could get trapped or maybe scalped out. It's a hard day. By the time it's time to go long, we're already in a late leg, so challenging day. Bar, where are we? Bar 31. Bad follow through for the bulls. We were at the swing high. And we see 32. Big bear bar selling off, but it had a bad close. 2-bar reversal, bar 33. Bad follow through for the bears. Bad follow through for the bulls. Bar 34. So bears that short down here. We can see how they do it because you put an entry, you put a line there, then you put a line at their next entry, maybe the high of 33. Short here, short the next bull bar, and look at 34. It goes one tick below their entry, so they get out of break even. They short here, their price is here, and that's enough buying pressure to cause a rally. I got out right when it started to rally. It is what it is. I'll just wait for the next leg. 35, bull bar closing on its high, sells off and rallies. Bulls are buying pullbacks. 36, 2-bar reversal, but we're above the high time frame EMA. Bad context to take that short. Bears that take this short don't really get a break even. How they did here, they don't here. You have to be very fast, actually. No, they don't really. So you short the low 36, they short the low 37, and it never comes back to the 50% mark. They're forced to buy back longs on 38, 39, 40, 41, and 42. That's enough tension to cause a few legs higher for a couple hours because bears are just now, they're trapped. Let's see, the bears that short 36, if they short 36 and short 40, they do get out break even, but that's a very hard trade, I think. I think it's better to just take the hit. We get follow through 38, 39, 40. There's a gap here. There's a gap here, right? Yeah. Look at the gap is lining up around the 13 swing. So bears are betting this is the trading range high. Then they get trapped 41, big climactic bar. Now we have 3 legs higher, complex legs. So leg 1, pull back, leg 2, pull back, leg 3. And each of those legs have 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. Leg 1, pull back, leg 2, pull back, leg 3. leg 1, pull back leg 2, pull back leg 3. And then we go into a training range for about an hour of the day. Bears get 2 legs down, leg 1, pull back leg 2. Second leg trap in a training range. Be very cautious of second legs in training ranges. Second leg traps are common. And then bulls get a few legs higher, leg 1, pull back leg 2, pull back leg 3. It's a wedge top at a training range. It sells off for a few legs, leg 1, pull back leg 2, pull back leg 3. Tough day. You can see the wedge top here, and then we see bar 62 creates a gap, so that's good for the bears. Now we know there's trap bulls. And again, this gap is happening at right around support. So here's support, support's down here as well. And it looks like there's a gap right there. Deep pullback training range behavior. Bulls that bought up here, they're gonna buy more lower. So this first line is their entry. Second line is they're attempt to get out or break even. Buy more here, get out of their original entry. So they did make money. They get out their original entry, and the market starts to sell off for that end of the day leg. Strong leg. I mean, it's not a strong leg down. A lot of overlap. Bears start to get the breakout. 68, 69, 70. Here, and here. 70 doesn't have a body, but it's closing. It's closing actually within here, but stop order bears that got short here. They were filled, and then they make a scalp here on 71. 72 is an inside bar acting as a bear flag. 50% of the time, a breakout of a triangle can reverse, so it breaks out and then it reverses, and then it reversed again down lower. 75. 76 has a tail. Went too far too fast. Bears took profits and it reverses up. Now it gives the appearance of a pullback. Leg 1. Let's do it like this. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Bears are starting to get a bear vacuum down to the open of the day. Training ranges, the open of the day is a target. I can't remember where it opened. 76, rallies, sells off. 78, rallies, sells off. Trapping bulls, and now we have a big gap down. Overnight price action is pretty slow. I think the gap just closed up. Yeah, so they closed the gap, trading range behavior, and now we're going to a tight trading range. So maybe not too many trades tonight until that breakout resets the cycle. So hope you guys had a good one. If you learned something, hit the follow button. If you want to learn more, stay tuned, I guess. There should be cool stuff dropping this year. Right now, I am working on an automated trading system, and then I want to do, yeah, it's pretty interesting stuff. Let me show you guys, so you guys get a peek of what's going on here. See if I do this right. So here's the automated system. All the oranges could have been entries. All the blue lines are entries. It's a mean reversion system. There's two types of first principles. First principle is the market's breaking out. The second first principle is the market is either reversing, is mean reverting. I trade breakouts, so I wanted to build a system that trades the other first principle, so I'm kind of getting both ends of the market. I did take a trade today. I shorted the high here, and my target was right here, and it was met. Took another trade, shorted here, and got here. Target was met, so I'm up. This P&L is not correct. I'm trying to figure out how to reset the P&L per session. This P&L is including every back test. Here's the back test. Total P&L. I'm trading 2 contracts, 4,200. The max drawdown was 1,000, so that's really good P&L. P&L to drawdown. Profit factor is almost 60. I mean, the win rate's almost 60. Profit factor is 1.2. So all tradable. The problem is getting the execution to match the back testing. That's where I'm stuck at. I'm entering the market. Sometimes enters late. Earlier today, it wasn't closing trades, so a lot of the winning trades turned red, and I was at work, so I didn't really have a chance to exit out. And every time I exit out, the back end, the execution messes up the system because it still thinks we're in a trade. So this is creating an entry right now, right here. When this bar closes, I'm not gonna sit here and let it close because it's a 3-minute chart, so we have to wait 3 minutes. This bar is right here. If it closes, the market's gonna buy that, and I'm gonna fade it back to the high. That's the system. So I hope you guys had a good one. Hope you guys are learning stuff. I definitely plan on dropping a lot of stuff. There's a lot of things in the pipeline. I'm very excited for this year. I started Randy's house psychology class in a couple of days, so I'll be going down deep diving that again. Hope you guys have a good one. I'll talk to you tomorrow. If you learned something, share the show. Don't be a hoe. Talk to you later, everyone. Thank you for your time. Bye.